Check 1 2. Hey guys, it is March 28th, 2025, and figured after wrapping up today to make a quick little chart review, kind of an overview of how I trade. Uh, it's very simple, very straightforward way of going about taking the market, and basically all it is a bet on continuation. So I don't know if you've heard people say that top pickers and bottom pickers get punished, uh, which I'm sure many of you have thought you've spotted the bottom or the top and figured you can get in at that key price and ride it all the way back up. But in reality, I'm sure you've come to learn that it's usually doesn't work out. So I used to be that guy, and I figured why not flip it? Why not just bet that the trend's not over? The trend's your friend, So basically, the way I do that is just utilizing basic market structure. So looking out for lower highs, lower lows. That's bearish structure. Uh, and so when you see that, you'd be looking for shorts. And when you see higher highs and higher lows, that's bullish structure. And if you're going to bet on continuation, you'd be looking for longs in that case. So I have two basic setups, and I've drawn them out here. If you can see all right. For a long setup, you just look for a higher high, higher low, another higher high. I've drawn this blue line to kind of mark out the break of high, just kind of spot it. And then after you've set that higher high right here, you would take the last swing high, and from that higher high, just draw down a fib. And I like to mark out the 50%, and then about the 55%, and then the 61, and kind of I'll just gauge which to use based on kind of the aggression. So if it's a very strong trend, I might get in a little bit earlier, get at the 50 fib. Most of the time I'm going for about 55. That kind of gives you enough room to get out the highs. And then if it's really kind of flat, I'll go for the 61. And I forgot to mention the risk. So basically, I'm just going for a 1-to-1. And how to set the targets and risks is you would say on this trade, on this long right here, I did it on the 55, and I would do a 1-to-1 and set my risk a tick below that swing low. So if price goes past that swing low, it's invalidating bullish structure, and so you kind of just want to be out of the trade. It is somewhat arbitrary, but that's where I set my stop loss, and then I'll set my target. Well, it's 1-to-1, but I kind of like the 55 because it gets you out just before these highs. So it's a lot of times these swing points, I'll show you right here. When price comes up to it, if you think about, say we're looking at this move right here, think about all the buyers buying in, and think about anyone who bought up here. And I don't know if this is exactly what is happening, but this is kind of how I explain the phenomena. But think about someone who bought up here, right? They get long, it's going up, they got their confirmation, and oh shit, it reverses on them. So now they're kind of screwed. And if they don't stop out, they're just kind of sitting in it, sweating, and hoping and praying it comes back because they made a mistake, right? Please, please. And it does come back, and they're gonna want to. They've been sweating. They just want to get out, right? So they're still long at this price, and so when price comes back to it, what are they gonna do? They're gonna, they're gonna scratch out and say, I'm done with that. So some selling steps in. I'm I guess other people will see that selling come in and turn it lower. And same thing happens, for people looking right here. People, who are getting in sells all the way down here. They kind of chasing a little bit. What happens? Oh, gets trapped here, getting squeezed out. What happens when price comes back to where they got trapped? Well, they're gonna do a little covering, so you're gonna see some bouncing happening. So that was a little tangent onto why I kind of like the 55, because it'll get you out before these swing points. And another tangent, another trade that I'll look for and take is when you do get to these reversal areas where say some people are trapped and which might turn the market. You can enter on a signal bar that taps into that. So right here, you'd see earlier that people got trapped, and you're thinking that when price comes back, they're going to want to get untrapped, kind of catch and release. And so you could, when price comes up and prints a decent bar, you could just enter below that and take a scalp. I'd do it. I'd do maybe like 2 contracts with 1-to-1, and then a 1-to-2, and then break even at 1-to-1. But so that is another setup. But anyway, back to the bread and butter. I already explained the long setup, and the short setup is much the same. So you're making lower low, lower high, lower low, lower high, and on a break of a swing right here, a swing low, you would anticipate this subsequent swing low, and as price starts pulling back, you just draw out your fib with your levels and place a limit as price comes in. Say get filled at about the 55 here, and you, after entering, move your stop to above that swing high, and you target to 1-to-1 with your little tool. So that's the strategy. That's just I don't try to predict. It's kind of, I just see the structure. Let's see, it's bear structure or bull structure, and I'll just bet that there'll be continuation. And if you go look at most charts, it's not 100% win rate, but I'd say it's mid 60s kind of ish. And if you just go ahead and take them, there's an edge to it. So today was a good example of kind of it was a typical day pretty much. So I did not mention what time frame I use. I actually use tick charts. So I will use the 60, the 40, the 24, the 16. So I'm actually breezing through some of these charts here. And, I'm sure you've heard that price action is fractal. So I'll take bigger picture trades on the 60 and then drill down to smaller tick charts on the 24 or 16, or even the night session extended trading. It's really slow, but actually this strategy is really effective in that market. Price action is still price actioning, so you can go down to the 12 range in the overnight and do this and kind of watch the paint dry, but it works as well. So again, we're getting back to the trades here. So came into the day, had the kind of flat range pre-market action. We did trade down here pretty hard. The overall picture's, it's a bear market, and so you're kind of thinking, short side overall. But again, not thinking too hard, just spotting bullish structure or bear structure and entering accordingly. accordingly. So this morning we went down to these lows uh, just before pre-market, and it rejected pretty hard. Um, so I was thinking maybe we have this strong leg up, which broke this swing high over here earlier, and we could get a second leg up. And price broke these swings coming up, so that's kind of bullish. The thing that maybe would have maybe kept you out would be the fact that it didn't break this swing high. So that's kind of iffy. So that may explain why that trade was a loss. So coming in, that's again getting back to the actual execution of the trade, seeing these swing highs broken, seeing how this is pretty strong. I observed that price had put in a top here, and I went ahead and just drew up my fib. I'll redraw it for demonstration purposes. So here we go, just drawing it up, drew it out. And since it's kind of a flat market, I figured that a 61 retracement would be a good way to go. Just assuming that the price action would remain kind of flat and I wouldn't miss a fill. It wouldn't, turn up at the 50 or the 60 or the 55 and go without me. So coming into open, I get filled, and pretty quickly I just take my stop here. So it didn't work out, which is fine. And again, if I wanted to be really careful, I would have observed that this swing high wasn't broken. So it is what it is. But subsequently, we can look at this leg and go back to the fact that it made a lower high here, and then we made a lower low. So we apply the model, the setup to it. And so as the price comes back up, I just take my tool, draw my fib, and I selected the 55 this time, whatever. And as price came in, I just got filled my one contract. Again, just betting on continuation. It started giving me a little heat, and kind of interestingly, there was another setup within this setup, or while I'm still in this trade, where you can see price went down and it broke this swing low. And I was actually looking at the 40 range, so I'm switching over to that. So every 40 ticks a bar prints, and so you kind of get the price action, see it a little more granularly. So it's a little more apparent here. But so I observed this swing low getting broken, and so that's just another setup. So I'm already short in the bigger picture setup right here, but I went ahead and entered this one and just applied my stop loss above the swing high. I had entered on a limit, where the execution's there. Enter on a limit at the 55 and gotten filled at 1-to-1. And then subsequently you can see the previous trade resolves as well. So I was out at that point, and looking on, you can observe that these setups, you can take them at a smaller level. So right here, right after I got filled, you can see that this swing low got broken. And so you could say, hey, I'm going to bet that the bears are going to keep on taking it down. So you draw your fib, you put your little wrist tool here, and you just enter there at the wherever you want, the 55, 61, whatever, and you got your scalp. And that's basically it. That's all I do every day. Very straightforward way to trade. It's keeping it simple. Keep it simple, stupid. Anyone can do it. It's just a matter of becoming a good operator. So just seeing the setup and taking it and accepting the risk and kind of continuing on. So yeah, I call it a 100 IQ strategy. I was one of these guys who started out with YouTube, a YouTube strategy, common one. I'm sure you've heard of price action trading system with Mac. Real good guy. Worked at that at 2 years, but it was very. You have to be with that strategy. Be very precise. You have to have pretty tight targets, tight stops, and be real surgical with it. And I'm not good at that. I'm not good at that. So, I kind of fumbled around after giving up the Pats and um, kind of just thought, why not use wider stops, relatively speaking. And so, as you can see on my second trade, um, these are the minis, by the way. It'd be pretty ballsy to do this on MNQ, but obviously it still works. But you can see on my second trade, the stop was almost like 60 points, which isn't a crazy amount of money on for MNQ, but that's a lot of room for a trade to work. But not having to be precise, having wider stops means you don't require as much precision, So you just, in the case of this strategy, you're just betting on continuation, and you give price enough room to wiggle around and for structure to hold, being this lower high, as long as that's holding, they still assume bearish structure. You assume continuation or an attempt at continuation. And that's another thing about this strategy. It's price doesn't even have to keep trending down. It just has to attempt to continue in the same direction. So that's getting out before swing low on this trade in that case. And so, you can enter one of these trades, continuation trades, and go ahead and hit your target. And as soon as you get out, the market reverses and it's heading the other way. But you got your trade in and you're out of the market flat. So anyway, that's the strategy. If any of you guys are looking to try something or been struggling, working with other systems and more complicated methods, this is kind of the way I skin the cat, so to speak. Yeah, so I'm gonna wrap there and hope you found this helpful, and take care.